Hello, Mr. Thanh. Our group is Group 7 with 4 members, Hoang, Toan, Nguyen Nam Anh, Nguyen Van Duyen, and Doan Yen Nhung. My group would like to introduce the topic smart trading. The table of contents have four contents. First is canceling. What is canceling? Second is Ichimoku. Why do we need Ichimoku? Third is candlestick charts. What is candlestick charts? Fourth is AMI broker. How does AMI broker work? Now we go to the first canceling. Canceling is a set of rules for trend charts. Each letter is representing a different principle. C. Current quarterly earning per se. EPS. Current quarter earning per se. A. Annual earnings increase. Annual profile growth rate. N is new products, new manager, new highs, new products, new managers, management, new prices. S is supply and demand. Supply and demand for outstanding shares. L is leading laggard or leading stock. I is institutional sponsorship. Is the support of financial institutions. Finally is M, market directions, market orientation. Counseling is well known by William O'Neill, founder of Investor Business Daily Creative. This method of buying securities includes both fundamental analysis and technical analysis. Analysis of currency, current quarterly earning per share, EBS, current quarter profit per share ratio. The first criterion of O'Neill's strategy is based on the company's most recent quarterly earnings per share. Earning per share is a politically traded company's profit per share outstanding. To calculate earning per share, you divide net profit by the number of shares outstanding. Typically, earnings per share calculations use annual or quarterly earnings. With the criterion A, annual earnings increases is annual profit growth rate. This means that good stock is a stock with a steady increase in profit next year compared to the previous years. Next year, criterion N is new products, new managers, and new highs. According to O'Neill, companies need something to drive the kind of growth needed for canceling company. Practice show that stock price increases are often associated with something new from the company. Next is S is supply and demand. The theory of supply and demand is one of the basic components of finance and economics. In the context of stocks, supply and demand refer to the desire to buy a stock in relation to existing stock shares. Next is L, leading laggard, leading stock. Investors should buy companies that are leader in their industry or sector in terms of performance of price. Next is I, institutional sponsorship is the support of financial institutions. The final requirement that stock must meet in the canceling strategy is that of the institutional investor. Big money is needed to boost stock big. Finally, is M. Market direction is the market orientation. Only believe that even if a shop meets the remaining 6 criteria, if a trader is wrong about the direction of the market, the trader will likely lose money. Number 4, the filter. The filter with 4 groups. First is flexibility. Because risk canceling is not defined holding period for the stock, this can be seen as swing trading strategy or a medium-term buy and hold strategy. Momentum. Canceling is a momentum strategy, as is the rule is buy when the stock is a 52 week high. When the stock is on increased volume and when the and definitions of momentum trading and market timing. Next, profile marketing table growth. The requirement of the canceling chapter is that a company must grow earnings, current quarterly earnings, and should stock sales. Finally, it's good refer to the characteristics such as product and survey leadership, innovation, or at least stock rise growth. Next is method. Method has three methods. First is rules. Second is idea, and finally is right. Now we move to presentation.
Hello, teacher. Now I will say about Ichimoku. Um, the Ichimoku Kindle title Ichimoku for source is a technical indicator that is used to loss momentum along with future area spot and resistance. The all-in-one technical indicator is comprised of 5 lines called the 10%, Kinzo-san, Senku span A, Senku span B, and Chiku span. And Ichimoku was developed by Rochi Hosoda, a Japanese journalist and published in the late 1960s. It provides more data points than standard candlestick chart. While it seems complicated at the first glance, the family with familiar with how to read the chart of often find it easy to understand with well-defined trading signal, and we will understand more about 5 lines in each Ichimoku. The first is Kinzo-san. The Kinzo-san is more important of the 5 lines that make up the Ichimoku, and is considered a long-term moving average. 26 session and in the variety above the Kizun, yes, is considered bearish. If the variety below Kizun is considered bearish. And to calculate Kizun equal highest price plus lowest price division to calculate this for 26 sessions. And Kinzun is often used as a stop loss for in trading. A small buffer for in traders movements should be used below the Kinzun to as plus a stop loss in an uptrend. When a stock hits a new 26 previous high, the Kijun will start to rise, and this allow the trader to also increase stop loss setup. This have in 2 ways. The first it reduce any potential loss until the trade risk break even, and secondly, when your trade risk break even, it allows the trader to take more profit at the equilibrium moves. The second line is Tekkan-san. The Taka sign, also known as the conversion line, it calculated by averaging the highest and lowest for private night price. One can consider they can add manage short term guide to price, nor can price stay far from the equilibrium that they can represent. For the stock in an uptrend, they can act at a minor spot level, and on the other hand, for the stock in downtrend, they can provide minor resistance. And based on intersection of Tenkan-sen and Kido-sen, we can come up with ideas. And to the third line is Sanku Spanish. Called Sanku Spanish or Sanku is average of two components, namely Tenkan and Kizun, and it paralysis 26 days into the future. And as you can see, the figure below show a relationship between Tenkan and Kizun and Sankuei. Today, Sankuei will be formed by average previous 26 days Tenkan and Kizun values. Similarly, today Tenkan and Kizun value when average will produce 1 point Sanku 26 days in the future. And if Sankuei is rising, it is considered a pure stock, and if they're falling, the stock will be considered to be bearish mode. We will move to Sanku Spanby. To calculate this Sanku Spanby, we will highest price plus lowest price and division to calculate it for 50 sessions plot 26 session forward. If the Senku be rise in the future, the stock is considered to be risk. On the other hand, if the Senku be drop in the future, then the chart is considered bearish. And like the Senku, the current Senku B can also provide support and resistance to stop rise. This support or resistance is especially strong if Senku B trending sideways. We will move to Kumo. The Ichimoku Cloud Kumo is the most special and outstanding feature in Ichimoku Kaido indicator system. As you can see, the Kumo Cloud is above Senku Span B and below Senku Span A. And identify chain with Senku A and Senku B. If Senku A is above Senku B, it is considered purist. And if Senku A is below Senku B, it is considered bearish. The reason for it is simple. Senku A is an indicator that average faster than Senku B, and therefore when a stock goes up, Senku A will be worth more than Senku B. And when the price falls, Senku A by definition move faster and drop before Senku B. And Senku A and Senku B form a Kumo cloud, and how to spot trends. The areas between the two lines is color and present possible spot or resistance for stock. As the case may be, if the current price is above Kumo, the trend is considered purely. If the current price is below Kumo, the trend will be considered bearish. And if the current price is inside Kumo, the trend is said to be consolidating. And Ichimoku cloud are seen as that demonstrate the strength of market sentiment. When cloud is big and thick, it will show that besides logical power of crowd is very strong and difficult to rest on the contrary. when the cloud is more thin, it will show time is unstained and easily penetrated mentality. We will move to Chico span. Chico span to calculate this Chico span, we will plus we will current yes will equal current cloud price plotted 26 session back. Chico is a simple that powerful component of Ichimoku, and as you can see it the picture Chico span, and Chico will have us have a more intuitive view when comparing the current price and the price 26 seconds ago. And Chico is also the most overlooked stat of the Ichimoku system, and many trades ignore it on that chart because of ignorance, because they think it is too simple to be useful. And Chico provide powerful information for trader. The first is if the Chico is above the price level of the previous 26 days, the chart is bullish, and if Chico is below the price of previous 26 days, it is considered a bearish price. And why will we need to know about Ichimoku. Today, Japanese candlesticks chart as the more popular way to analyze price action, particularly with technical traders. They offer much more information visualize than traditional light chart, and showing market highest point, lowest point, opening price and closing price at the balance. And the most successful trader come up with trying to say Germany, it is very difficult to profit from a non-trending market, and Ichimoku will have mitigate this problem to a certain extent. It helps the trader to identify non-trending markets so that they can be avoid the following session. And the individual component of Ichimoku are designed to provide the flow information. Is that spirit or period? Does that show consolidation of price? And if that is period spirit and is a monument in a chart, if a chart is consolidating, how long will it take before consolidation can end? And we will move to candlestick chart. Japanese candlestick is a type price chart that shows the opening, closing, high and low price point for each given price. It was invented by Japanese price merchant centuries ago and popularized among Western trading by broker called Steve Nielsen in 1990. And today Japanese candlestick chart are the most popular way to quickly analyze a price action, particularly with technical trader. They offer much more information visualized than traditional light chart, showing market highest point, lowest point, opening price and close price and glass. And there are many models of Japanese candlestick. Example, hammer, Evantis hammer, or morning star, and you will move to some example model to know more about Japanese candlestick formation. The first model we will provide to you is a hammer. The hammer model pattern had a lower shadow, twice as long as a real body, and when the high and low are equal, Pulip hammer candle is strongly formed. Conversely, when the open price and high price are equal, the hammer pattern is considered less bullish, unable to return the opening price. Inverted hammer model is an inverted hammer candlestick formation occur when in a price reversal, and the inverted hammer had an upper shadow that is an least twice and length of real body. When the lows and the open are the same. Bullish inverted hammer candle is former a strong signal than when they lost. We go to bullish engulfing pattern. The engulfing bullish pattern consists of two candlesticks, small bearish candle and larger pulling candle. Therefore, the body of day one bearing candle is usually smaller and can be contained within the body of a day. Of the day two bullish candle on the day two, and the markets had a gap and go down. Pricing line pattern model. The pricing line pattern is similar to I was think pulling pattern. There are two components: peeling candle day one and peeling candlesticks day two. Peeling pricing pattern occur when peeling candle on day two close about the middle of the day one peeling candle, and they usually significant gap between the closing price and the first candle and the opening price of second candle. The morning star model include big bearish candle day one and small bullish bearish candles day two, large bearish candle day three. On the day one, downtrend usually made a new low. Day two started with a gap down. However, the price return first much lower. The day two candle is quite small and can be bullish, bearish, neutral. Day three start with a gap up, and the market can burst the price even higher. Eliminating day one loss. 3Y solid model. The 3Y solid pattern occur over 3 days. Consist of a consecutive long red or white candle with a small shadow, and the opening and closing price of the following candle are gradually higher than the private day candle. Hagi mask candlestick in formation occur mainly at the top of a trend and can serve as a warning of possible downward reversal. The hangman had a longer lower shadow and less twice length of the real body. After a long uptrend, the formation of period hang mass butter is because the price has setting by dropping significantly during the day. The period engulfing the butter consists of the two candles, small bearish candle day one, larger bearish candle day two, and the body of day one can be contained within bearing body of the day two, and the market is bullish on day two. However, the price is not put much higher before being put lower below the previous day open. Even star model, the pattern the even star evening star pattern consists of the three candles, large police candle and small police candle or purest candle. Day 2, big prayer candle. Day 3. On the day 1, new high must day 2 begin with an inquiry graph. However, the bride is not first much higher. Day 3 start with a bearing graph, bearing signal, and the bride can be further lower, often eliminating day 1 guess. The shooting star pattern had a long upper shadow, usually at least twice the length of the real body, when the low and the close are equal, and purest shooting star candle is strongly formed. The upper shadows of the metal candle indicates that the market had been starting for resistance and supply. Three black candlesticks pattern consist of the three consecutive long rest candle with a short of notched 10 shadow. Each day opens at a similar price to private day, but selling pressure further price lower and lower with each close. The dark cloud cover model. There are two components to the dark cloud cover model: police candlestick day 1 and pairing candle day 2. And the dark cloud cover pattern occur when pairing day 2 candle close below the mid day 1 body. Also, the bright spread on day 2 just to fill the gap and close significantly on the rise of day 1 candle. Doji candlestick. Doji form when the openings and closing bright are equal. Once opens and the bright was put higher only for the bright to reject it and burst lower. However, the market cannot hold the bright lower and then burst the bright to the opening bright. Spinning top model. The spinning top pattern had a short body between the shadow of equal length. The pattern so in decision in the market, so the price will not change much. And the various pattern is often understood as prior of consolidation or rise that follows signification of change or downtrend. Following three methods, the Paris pattern is known as the three-step pairing pattern and is formed from a long rest real body, followed by three more green real bodies and another real body. The green candle can be contained within the range of Paris black candle. The pattern shows traders that the buyers do not have enough strength to reverse the trend. Pricing three methods. The Pullet pattern is the opposite, known as the three-step Pullet candlestick pattern. The pattern consists of three short red candle sandwiched within the range of two long green candles. The three-step Pullet pattern shows that despite some selling pressure, fire retain control of market. And we need to understand gasoline and candlestick, gasoline can Japanese candlestick to know application to army broker and right code to send the signal buy and sell stock. And this is my application and demo of the group. Nam Anh will present this.
And now I'm going to talk about our group project that we are going to use Ichimoku strategy with RSI indicator. So as you can see here, this is Ichimoku cloud chart that we already export here. The Ichimoku indicator gives a lot of good buy and sell point. And, give us a great strategy about when we should sell or buy or sell some stock. But the problem of Ichimoku that it needs some signal to confirm if the uptrend or downtrend. So sometimes Ichimoku will miss some opportunity to sell or buy some stock at good price. And so that we rely that we can use RSI indicator to give us a better buy and sell signal, because RSI don't need RSI is based on overbuy and oversell signal, so it don't need some bearish or bullish signal to give us buy and sell signal. Like here, it's when here the can cross zone. Ichimoku give us sell signal when can cross zone, but over here we the RSI area give sell signal because the RSI has crossed 7. So here if we sell the stock here, we will get a little more profit than when we sell it here or over here. Ichimoku give a weak signal about Kijun cross price cross Kijun and underground, but as I already give a signal that we should buy here, because as I is already lower than 30. So that's sometimes as I give some better opportunity to buy stock at low price or sell stock at a better price other than Ichimoku. Now I'm going to show you this is the optimize of Ichimoku only. I only use Ichimoku in this code to and optimize to get the maximum profit that the Ichimoku indicator can give. Now let's see how about this stuff. Here when I this in this code I give some I use RSI and combine with Ichimoku. Let's optimize to see which is better. Wait. Code I will send you in our group project group file. Will send you the code. So if you look at this result, Ichimoku already give very good profit with high CAR MDD and high RAR MDD. Everything is good, but when we combine the Ichimoku indicator with RSI, it gives even better result. Like here we got 1.9 CAR MDD. And every start is much higher than the Ichimoku only. So let's look at another stock. See. This is the code of analysis to only about Ichimoku, and we don't have SI in this. We optimize to the in here. This is the code that we combine with SI, and we optimize some optimize the period and using SI. So let's see the result. Oh, it's not finished yet. So as we can see here, Ichimoku AD give great good result followed by cell signal and some that are pretty good that we got some profit here. But KAR and IAR MND is a little low. By profit factor or supply ratio is a little low, but reasonable. But look at here. Everything is better. At some result here, everything is better than what we see over here. Every ratio, max profit, CAR, M&E ratio, IAR, M&E ratio are better. So we look here. Give us a good visual about the code. We can take this. So that's all we want to talk about. That we can try the Ichimoku indicator only is pretty good, but its signal is a little slow. And when we combine it with the SI indicator, it gives a much better signal. Like we will get more buy opportunity and more and better sell signal than Ichimoku. So, thank you for listening. That all we want to talk about.